It's the sugar pact that is in focus. Now, the question that everyone has right now is how India stands to benefit when it comes to sugar and the Iran-Israel war. Mr. Praful Vithalani, Chairman of AISTA, All India Sugar Trade Association, joins us. Mr. Vithalani, welcome to the show. Always a pleasure to speak to you. My question coming to you is, currently the area of contention is why are sugar stocks buzzing in trade today, and how does India stand to benefit when it comes to the Iran-Israel war? Because we are talking about Iraq and Dubai, which has the largest sugar refineries. Any disruption over there probably could mean some bit of positiveness in terms of Indian sugar mills as well. Your initial take?
Yeah, thank you for inviting All India Sugar Trade Association AISTA. And regarding the sugar stock buzzing today, India is well settled with required production, and we have some room of 3-4 lakh ton for exports. But the world is engulfed. Actually, everywhere the position is surplus in the world. So the thought on the sector is going on that due to this situation, geographical situation, the highest producing sucrose is the Brazil, and Brazil have two-tier system, ethanol as well as your sugar. So the prices on Leaf Nibot is 5-year low today, and season is likely to start by end of this month or next week in Brazil. So the industry in Brazil will opt to produce more ethanol than the sugar. So this is a support to the 5-year low price of this thing, Leaf and Nibot international markets. Plus, how India is going to benefit is that there is a pending demand of the sugar industry to increase the ethanol procurement price by OMC. Once though we don't wish that this battle goes more time, but crude price if goes up continuously, then there will be a chance, a room for government to increase the procurement price of ethanol by OMC from the sugar millers. Third thing is like the vessels which are come to Indian countries, Asian countries, and the Gulf countries, they are that will get disturbed to have from Brazil. So some demand from the neighbor countries will come to India. So there will be a small room for export. So 2-3 reasons are there.
Right. Prafulji, hi, this is Sharad here. Good afternoon. Always a pleasure to have you. I just wanted to ask, because India does have some neighboring countries where they're given their exports, like Afghanistan is there, and a couple of more countries are there. Just because of the parity of the domestic sugar prices and the global sugar prices, will this mean that there might be more exports coming in for the other countries also?
No, I see. First of all, sir, nice talking to you. The two things are the beta risk factor while doing a sugar trade is the transportation from Brazil takes 1.5 months, whereas India can get delivered within 10-15 days. So your risk ratio is lower while buying Indian sugar. Indian sugar is having highest, we can say, sucrose into it, that is 99.8 world's number one. And pricing, we are not matching. We don't have parity. That is the concern, because we are onto the lower stock. Maybe closing stock could be, according to our January, around 43-44 lakh, which is required for the domestic this thing. We have make a projection in January that there will be a 7 lakh metric ton exports. So that room can be cleared immediately, because the person who need immediate sugar, they can buy from India.
Okay. Mr. Vithalani, then what's the kind of impact you're seeing when it comes to prices? In the near term, are you seeing any trends? Because India as a market, at least from a domestic front, is very controlled. But anything that you see in terms of, apart from ethanol sugar pricing?
Yeah, see, actually, ethanol pricing is also very well, controlled by the central government. Even the monthly quota restrict a sugar mill to sell how much quantity is being decided by the central government. But at the time of when the entire world is in surplus, we are not that much surplus which we can offer more exports as such. So we need our own domestic consumption also. So I personally, we had projections of 293 lakh ton in January, and within a day or two we are going to revise second estimate our, and in that we are looking that it will be slightly lower than 293. So yes, there is a room is less from India to export as such, particularly sugar sector is concerned. And now the season is almost going to be over by 15th of March. So making ethanol will also be a slightly difficult.
So, two things that are fueling the sugar rally and trade today. But thank you, Mr. Vitlani, so much for joining in. It's always a pleasure to speak to you as well. So, when Brazil comes in, they might divert to ethanol production versus sugar. So, two, there are chances that if crude prices keep going up, there is a potential that crude procurement prices will also inch up. What all these sugar companies get from OMCs. That's number one. And two, when it comes to neighboring exports, India could be one of the preferred destinations as well, because we do have a surplus and the quantum that Mr. Vitlani also mentioned. So that could be a benefit, because the margins, when you talk about exported sugar versus domestic, is always higher. So that becomes a beneficiary for all of them as well. But let's quickly look at what's on Google Trends today.